Chevron has just made a whopping $53 billion deal to acquire Hess, and there's more to this story than just the numbers. So, in this video, we'll break down what this acquisition means for the oil industry. The Chevron Hess deal. Alright folks, buckle up because we're about to take a roller coaster ride into the wild world of oil deals. Chevron, you know, that massive energy company, has just splashed out a staggering $53 billion in stock to snag themselves a little something called Hess. That's like buying your neighbor's car but on an epic billionaire level. So, what's the deal with this deal? Well, it's like Chevron's way of saying, hey, we want to be even cooler in the US oil market. But that's not all, folks. They've also got their eyes on ExxonMobil's humongous Guyana discoveries. I mean, who wouldn't want a piece of that oil pie, right? It's like a high-stakes game of Monopoly, and Chevron just picked up a prime piece of real estate on the board. I can almost picture the Chevron CEO shuffling oil barrels instead of Monopoly houses. Do not pass go, collect $53 billion. But let's not forget the best part, Guyana. It's like the hidden treasure chest of the oil world. Chevron's going all Indiana Jones on us, aiming to get a 30% stake in Exxon and Canucks Guyana oil block. It's like winning the lottery but in the world of black gold, the US oil landscape. Hold on to your hats, because we're about to tumble down the rabbit hole of the US oil landscape, and it's crazier than a roller coaster ride. So, check it out. Right on the heels of Exxon's $60 billion shopping spree earlier this month, Chevron's like, hold my oil barrel. What does this mean? Well, it's like a colossal game of oil chess, with Exxon and Chevron making moves that'll shake the entire board. We're talking about a major oil and gas production boost, and the name of the game is US Shale Reserves. Imagine this. It's like you and your buddy are in a friendly competition to see who can collect the most action figures. But instead of action figures, it's billions of dollars worth of oil. And these guys are out there trying to out-collect each other. Exxon and Chevron are basically becoming the superhero tag team of US oil production. They're like Batman and Superman, but instead of Gotham City, they're saving the day in the heart of Texas. These acquisitions are set to turn the US oil landscape into something straight out of a sci-fi novel, and we're all just along for the crazy oily ride, impact on European rivals. Now, let's turn our attention across the pond and check in on our friends in Europe, who've been all about that renewable energy lifestyle. You know, wind turbines, solar panels, and all things eco-friendly. The Americans, led by Chevron and Exxon, were doing some fancy footwork of their own in the fossil fuel tango. The result? A blockbuster deal that's putting the US oil companies ahead of the game. These European oil companies might just find themselves in the rearview mirror, watching the American giants zoom ahead in the fossil fuel race. It's like a high-speed chase, but with oil rigs and corporate boardrooms. And while it's entertaining for us, it's got to be a bit nerve-wracking for the European competitors. The crown jewel, Guyana. Let's talk about the sparkling gem in this colossal oil deal. Guyana. Picture this, folks. It's like discovering El Dorado, but instead of gold, we're talking about a jackpot of black gold, oil. Chevron just hit the jackpot by snagging a 30% stake in the Exxon and Canucks oil block in Guyana. Guyana isn't just another blip on the oil map. It's the hottest ticket in town. This place has transformed into the Usain Bolt of oil provinces, sprinting ahead of the competition. I mean, we're talking about a mind-blowing 11 billion barrels of oil and gas discoveries since 2015. It's like the universe decided to shower Guyana with oil riches. So, why is Chevron so starry-eyed about Guyana? Well, it's simple. This acquisition is all about securing a piece of the Guyanese dream. The Stabroek oil block is like the Willy Wonka's chocolate factory of oil, and Chevron just got their golden ticket. This deal isn't just big, it's Guyana big, and that's a whole new level of oil excitement. Behind the scenes. Let's pull back the curtain and take a sneak peek at the behind-the-scenes drama of this epic oil acquisition. You'd think these deals happen in a New York minute, but in reality they're more like a slow-cooked stew that's been simmering for years. It's like a tale of two oil titans, Chevron and Hess, playing a game of chess with their companies. These CEOs weren't just pen pals for the last 2 years, they've practically been oil buddies forever. They've got history together, having been partners in the US Gulf of Mexico fields. It's like a buddy cop movie where the two detectives start as rivals but end up being best pals. So, this acquisition wasn't a sudden decision. It was a carefully crafted masterpiece. They've had meetings over cups of coffee, lunch dates, and probably even late-night phone calls. It's like watching a slow-motion heist movie where every detail is meticulously planned, and when it all comes together, it's pure cinematic gold. These CEOs are like the masterminds behind an epic plot twist in a Hollywood blockbuster. And just like in the movies, it takes time, patience, and a lot of convincing to pull off a deal of this magnitude. Financial impact. Time to break out the calculators and dive into the nitty-gritty financial details. In this corner, we've got Goldman Sachs playing financial matchmaker for Hess. And in the opposite corner, it's Morgan Stanley whispering sweet financial nothings to Chevron. They've been the fairy godmothers of this magical oil union. But guess what? The stock market had its own dramatic interpretation of this whole deal. It was like the stock market suddenly decided to throw a tantrum because it didn't get a shiny new toy. Chevron's shares went all dropsy McDropface with a 3.3% dip, and Hess's shares weren't far behind, taking a modest 1% tumble. It's like the stock market wanted to test our roller coaster riding skills. Also, let's not forget, the oil industry can be a bit of a diva sometimes. It throws a fit and drags down stock prices, especially when crude oil prices decide to do a little dance of their own on the same day. It's like trying to keep a house of cards steady during an earthquake. So, even though the financial roller coaster had a few unexpected twists and turns, it's all part of the oil industry's grand performance. Sometimes, you just gotta hang on and enjoy the ride, even if it comes with a few stock market surprises, synergies, and future plans. Chevron came in with an offer that sounded like a math problem from an alternate universe. For each Hess share, they offered 1.025 of their own shares. The end result? A mind-boggling total deal value of $60 billion, and that's including all the fancy debt. It's like trying to calculate how many pizzas you can buy with a mountain of cash. But here's the juicy part. Chevron and Hess are like the dream team of cost-cutting. They're planning to join forces and create something magical called cost synergies. Picture it like they're combining their superpowers to save the world, or at least their bank accounts. They're expecting to conjure up a whopping $1 billion in cost savings within a year of sealing the deal. And wait, there's more. Chevron is ready to Marie Kondo their portfolio. They're planning a grand garage sale, but instead of old furniture and knickknacks, they're aiming to sell off assets worth a cool $15–20 billion. It's like decluttering your house, but on a billionaire's level. Now, post-acquisition, Chevron has big dreams and deep pockets. They're ready to splurge, planning to allocate a whopping $19–21 billion annually for major projects. It's like they're about to build their own oil-themed amusement park. What's next? So, what's next? The deal will go through regulatory reviews, but Chevron's CEO isn't anticipating any significant antitrust concerns. The acquisition is expected to be completed in the first half of 2024, and the Hess CEO will join Chevron's board of directors. This acquisition is part of a broader trend in the oil and gas industry. While European companies have been shifting towards renewable energy, US companies are doubling down on fossil fuels. Chevron and Exxon are making financial moves to capitalize on high energy prices and demand. However, this consolidation has raised concerns among environmentalists who see it as a setback to climate goals. They argue that these acquisitions could undermine the Paris Climate Agreement and hinder global efforts to combat climate change. That's it for today's video on the Chevron Hess deal and what it means for the oil industry. It's a complex landscape with strategic moves that will shape the industry for years to come. If you found this video informative, don't forget to like and subscribe for more updates on business and industry news. Thanks for watching, and we'll see you next time.